Hey, all you Mitchell homies, welcome back to Behind the Build with Scott and Deven. I'm Scott.
And I'm Deven.
Today's episode, we're going to talk about SimplyMitchell and the SimplyMitchell advantages that are exclusive to Mitchell Homes, totally unique to us.
That's right. So why don't we just kind of jump right into it and let everybody know right now that I had an epic fail on pod one, take one of this podcast. I turned my mic off, so you see some different equipment here, and this is to Deven proof, I guess, the podcast. Is that what we're doing?
Yeah, we've had an issue with pretty much every episode. The last episode was great because I was giving Deven a hard time. The episode before that, he had his microphone hanging from a tassel on his hoodie, and you could hear it scratching during the whole episode. So the last one, he put this little furry, like black wind guard on it, and it looked like he had a rabbit coming out of his pocket.
Oh
so
God.
We're talking about it. He pulls it out. I think we're gonna show you guys a little video of that.
Yep, I put the fur.
Oh yeah, that's getting brought up.
I think it should. Put this.
I wouldn't.
Because this mic, right?
Hey everybody, welcome back to Behind the Build with Scott and Deven. I'm Scott. So
Accidentally shut it off. So we
had no idea. We recorded the entire episode. We thought it was our best episode ever. And then about a week later, comes back from our editing team and they tell us that Deven had no sound.
Leave it to me to mess this up. But the good news is, and what we've been saying the whole time, is we do these unscripted. We very little editing, very little production. We try to make this raw. We want you guys to feel kind of our enthusiasm, and we don't want it to feel super scripted. So, because of that, we're going to try this again on a different day, and I think with the new equipment, we'll really thrive today.
Let's hope so.
SimplyMitchell, probably the biggest cornerstone of what we are. As you all know at home, I've only been here a couple of years, and this has been established a long time ago. Scott, why don't you tell us a little bit of the history of Mitchell Homes relative to the SimplyMitchell and how that sets us apart?
Right. So Mitchell Homes was started in 1992 by my father, whose first name is Mitchell, and that's obviously where the name came from. So my dad started the company, and his hope was that he could build on people's land for, little to no money down. And at the time it was, almost exclusively rural building, rural buyers. They own the land. They may not have a lot of money in the bank to put down into a home. So they weren't able to build a home with anybody else. So this was a way to allow them to build because they did have that equity in the land.
Right.
So, I guess I'm kind of skipping forward here, but SimplyMitchell is no down payment, no construction loan costs, and no closing costs. When he started the company, that was his philosophy. That's kind of how this came about. That was in 1992. I don't even know, gosh, almost 33 years ago now.
His dream was to enable folks who didn't have a lot of cash to be able to build a home. And that's where the SimplyMitchell comes in. What you said, no money down. We fund the construction costs and no closing costs.
Yeah.
It's really simple, right?
Yeah, we always internally kind of refer to it as the no-no-nos, especially in our advertising. So no down payment because the land can act as the down payment without having to actually put money into the deal. No construction loan. We don't use construction loans typically. We self-finance everything. We have a pretty large cash reserve, so we're able to use our cash to build the home. So we don't use construction loans, which means there's no construction loan interest that is charged back to the buyer.
That's the real advantage too, right? So no money out of pocket and then no interest.
Right.
Which is really, we'll talk about it a little bit later, but that's where the real advantage comes in. It allows you to build with us for $150 down, right? That's what it is.
Yeah.
$150 is just the administration fee.
Right.
And then, provided that you can get pre-qualified, you don't have to have any money out of pocket.
We would love for you to send in a pre-approval, it's a short form that's on our website. You can go to our website, fill out that form, send it in. Then you'll come in. You'll have an appointment with a new home consultant. And should you decide to move forward, we ask for $150. That's it.
Right.
Just $150. You can pay with cash, credit card, check, however you want to do it. And that's really all. That's all the money we get until we actually close on the home, which is crazy.
Right.
Like, I mean, it's crazy. You may not believe it, but there's nobody else out there in the areas where we build that does it. And it's totally unique to us, and it saves a ton of money. We're going to show you guys in a little bit how much money you can save.
So when we say Simply Mitchell, it really is just that simple. I mean, not to sound too shopping networky, but it really is simple. We've really simplified the entire process so that there's less stress. There's stress enough building a house. Forget about the financing. Right. It can be a stressful environment, and when you have to add the financing into it and the interest that goes into it, it can get daunting for anybody. And we make it a simple process. Your father's vision and dream was to make it simple for folks, and that's exactly what we've done. So, the Simply Mitchell thing, we talk about it, and we kind of, gloss over it, and we're not as, I guess, assertive with it, which is why we want to have this podcast, because we just know what it is, but we want to bring that message to you, is it really is just that simple in that financing part.
Right. Yeah. Yeah. I think we do, we kind of take it for granted because we're so used to it. We've been doing this for 33 years. Our salespeople even sometimes take it for granted and don't, they forget about like how valuable it really is. It's so valuable.
Right.
The construction loan interest, so let me go a little bit into that. So typically when you build with any other builder other than Mitchell Homes, you're going to have to qualify for and get a construction loan. The way that works is basically as the builder is building the home, they're going to start taking money out of that loan, and they're going to start taking money out, as soon as they do anything. So they may even start before that. They may take money out to, do the clearing, right? They're going to take money out to put the foundation in and do the footer. And so as they're taking this money out, you're starting to accrue interest, and the interest rate on a construction loan can be, it's higher than a mortgage loan. So if a mortgage loan's at 6.5%, the construction loan may be at 9 to 10%.
Okay.
So they're taking that money out, you're accruing interest, and you're paying that interest. Either you're paying it monthly throughout construction, or you're paying it back at the end. But somehow you're going to be paying that interest back, and it's a substantial amount of money over, the course of the entire construction process.
Right. So, I mean, and that escalates, that 10% is just flat right across the board. So, you may not feel it as much month one, but boy, as you get closer to closing, it just applies. And then you've got to be speedy with the build, and you've got to do a lot. So it adds a lot of pressure that we don't provide that pressure.
Right.
It's our money. We finance it. Of course, we want to close as fast as we can, but there's no pressure on you. And we never charge you interest on that ever, right?
No, we don't charge it. We don't charge any interest at all. And I mean, just listening to you, it kind of explains a lot, because we're not getting any money, we're highly motivated to build the home as efficiently as possible so that we can get paid. So, whereas, somebody's working with a construction loan, what's the motivation? There's really no motivation, right? Like they can take a year, 14 months, however long it is, building the home, because they're taking their money as they go.
Right.
And the longer it takes them, the more interest you're paying. So, we're at about 120-day build time on average from footer to close.
That's right.
I'd put us up against anybody, and I bet we knock the socks off of them.
That delay in construction, when they do an estimate for a construction to perm loan, they estimate that interest into it. I don't know what Scott's laughing at me for. I must have done something already. But, that interest is factored into what the loan amount's going to be. Yeah. So it gets costly. You have to factor that whole thing in. And if you don't, you're going to be in trouble.
That's right. Yeah. I don't know what happened there. That was, Like I was back in school again, man. Just got the
Well,
giggles.
that's all
Sorry.
right.
Yeah.
I'm really funny. I'm a funny guy. Um, but for those folks out there, it's imperative that they understand how simple it is. Now, when we were talking about doing podcasts and we're coming up with subject matter, we were, Simply Mitchell is a pretty easy explanation. It doesn't necessarily require like we can kind of explain it in about 10 minutes. There's going to be a lot of nuanced questions about construction of perm and how that factors in if you don't own your land. So if
Right.
you have a mortgage on your property, that can factor in a little bit differently, right?
Right. So, as far as the mortgage versus the construction loan,
Right.
right? So yeah, I mean, um, with us with a mortgage, you're not paying anything until we actually. It's typically 30 to 60 days after closing when you're going to pay that first mortgage payment. A mortgage loan is easier to qualify for.
Yeah.
Credit limits are a little bit lower on a mortgage loan versus a construction loan. The rates are lower, like we talked about. Sometimes we do need to use a construction
I
loan.
was just going to ask you that.
Yeah, yeah.
When does Simply Mitchell not work with a specific buyer?
There are instances where we're going to use a construction loan. However, before I tell you what those instances are, the important thing is even if we use a construction loan, we're not going to charge any interest,
Right.
because we're not actually taking draws. So where this comes into play is if you come to us and you're either in the process of purchasing land or you've recently purchased land and you have a really high lot payoff. Like let's say you have over $100,000 left to pay on the lot itself on a land loan. In that situation, we would set it up as a construction to perm loan. We would pay the lot off up front. So the lot gets paid off. And then that gets rolled into that loan. And it just, again, we don't take any money out, but it pays the lot off and allows us to then convert that to a mortgage loan and close at the end. So basically, it functions the exact same way as we would if we're not using a construction loan. The only difference is it's paying off the lot. And then there would be some interest there that you pay on the lot, but you would be paying it anyway because you already had a land loan.
That's right.
Right. So it's really no different. There's no disadvantage to you. It just allows us to make that work.
In order to do that, if a customer has a balance on their property and they want to roll it into their mortgage, do they have to use like our lending group? Or because I know that it's pretty specific to who we use and who has that package. Is that right?
To provide the Simply Mitchell savings advantages, we do require that you use one of our partner lenders. We typically have, three, I'd say on average about three partner lenders we're working with. One or two that we're going to send the majority of stuff to. And the reason we do that is because our business is a little bit unique. It's a little bit complicated because we're building on other people's land. And these lenders know that. They know how to make it, they know how to make the loans go smoothly without any complications. Most lenders don't typically deal with this. They're typically dealing with like a real estate transaction,
Right.
right? Where it's like just a standard, resale situation, or it's where you're going into a neighborhood and buying a home that's already built from a builder. These partner lenders that we know we've been working with for a long, long time, and they know our business, they know our customers, and they make it easy and seamless. And that's why we require that. There's no other reason. It's not like we're getting kickbacks or anything like that. Like
Right.
that's against lending rules. It's not, it's just that they know our business, they know our customers, and we trust them to get it done.
Right. So, I mean, again, back to Simply Mitchell, it's just a simple process. I mean, I
Right.
guess why you called it that. It makes it easy for you to, buy with us the home that you want, and we take at least that portion of the stress out. I know we've had previous conversations about how to buy land, what to look for land. That stuff comes with its own set of stresses and anxieties, but the financing part we've tried to eliminate almost lock, stock, and barrel. I mean,
Yeah.
just really tried to get rid of it. Now with the Simply Mitchell, there's a few things that I think would be valuable to discuss. We talk about, you've heard us all talk, if you've listened to our podcast, you've heard us talk about this 150-day schedule that we have, this price lock. And that kind of marries to the Simply Mitchell. I mean, the Simply Mitchell doesn't work without this kind of price lock. You can't just have forever funding. You have to have timetables, and that's where it gets difficult for us, right? So we have a 150-day price guarantee.
Yes.
That marries with the Simply Mitchell program.
Right.
And in that, we've gone over this in other podcasts. Contract to keys, we went over it in detail, but I think it's just something that we need to continue to instill, is that, we have a 150-day price guarantee. That's another thing that no builders do. They just won't lock in a price and say, well, this is good for 150 days, especially in the market that we're in. And people would say the market that we're in today. I would argue, I've been doing this for over 35 years. It's always this way.
Right.
Prices always fluctuate. Things go up, things move. And so it's never stable, right?
No.
For us to basically insure the price for 150 days is another risk that Mitchell Homes takes on your behalf.
Oh, huge risk.
When you talk about Simply Mitchell and all the advantages there, then there's a 150-day schedule, and that locks the price for 150 days. Now, I want to take a second and just jump in here where you think you need to. I want to talk about what other folks do with escalation, because we don't talk enough about that. And I think it's super important to highlight what escalation means, because with other builders that don't have a price lock guarantee, escalation creeps in kind of like interest.
Right.
And escalation means that every month there's an audit of pricing done by the builder. And if you wrote a contract at $400,000, the next month lumber goes up 25% or some ridiculous number, like we saw in COVID.
Yeah.
They have the right to escalate the price of the house in whatever that jump might be.
Right. Yeah.
And they do it month over month over month over month until the house is closed.
That's right.
So we lock our price in for 150 days. We start the house. If we get it in that 150 days, we still don't change the price in the 120 days that it takes to build.
No.
Where escalation carries through from pre-construction all the way to close.
All the way through construction. Yeah. So we're really locking the price for, if it was an average job, right, is 150 days, say pre-construction, 120-day build time, that's 270 days, basically 9 months. 9 to 10 months on average is what we're holding that price. So if you come in tomorrow and you sign, and as long as if we start the home within 150 days, we're not changing your price at all until we're done. So it's a huge risk for us, because we don't know what's going to happen with prices over the next 10 months. Right. I mean, you think about like escalation, it's kind of like the buzzword lately has been inflation. It's basically like inflation that, like, imagine like
real-time inflation.
Right. It's like, yeah, it's actually, but you're being charged for it, like, as it happens, like, even though you already made the purchase, right? So you made the purchase, and then inflation happens, and you're being charged for it, like, post-inflation happening. It's crazy, right?
It is, and it's challenging, and it's something that I think you guys should know,
right?
Because it's important. We're trying to delineate us from everybody else in a very saturated market. We build on your lot. Not many people do it or do it well. We offer Simply Mitchell. We offer a price lock. We're doing things that nobody else does. Now, are we perfect on the 150? Just like we talked about in Contract to Keys. And if you haven't watched that, I encourage you all to go back and watch that. This is where the partnership really takes place. The partnership with us, Mitchell Homes, and you, the buyer, happens. And, there's a schedule, your sales consultant, and we've just created we've created a new role within our organization. We call them New Home Sales Associates, and their job is to continue to keep you on that schedule so that you don't have to expire. We've talked about all the reasons. I don't want to go back to what could extend it, but even in the case that it does extend past the 150 days, we also do offer a price extension, which again, nobody does that.
So we have the 150-day price guarantee, which is standard with every home we build. We also offer an additional 90-day price lock, which we offer you at the time of signing your agreement. So, at that point, your salesperson's going to offer you that opportunity to buy that additional 90-day price lock. And, it's really kind of dependent on where you are, what the situation is with your lot, county specific. Some counties take longer. Some lots have more difficult situations. We don't have to go into all that right here, right now. But, that can basically take that takes you to a 240-day price guarantee,
right?
Which is absolutely 100% unheard of.
Correct.
Then you add 120-day construction on that. That's a year.
Right.
360 days.
It's just, I want to make sure, because I know that there's folks out there that might be watching it and say, well, I expired my 150 day, it's bait and switch, blah, blah, blah. I want to address that and say, it's not, we advertise it. There's, to Scott's point earlier, there's nothing more that we want to do, because it's our money that's sitting out there, is get this thing closed with you.
Yeah.
It's our every purpose, and it's every single thing that this entire machine does to get those things done on time. And, we want to make sure that it's clear in this podcast what we mean by it all. So if you're watching this podcast, there should be no surprises as to what we're talking about. Now, it's our job together to get you to the 150. And that way it allows the Simply Mitchell to really take effect and have a really good effect for you.
Right.
And even in, I guess COVID days were different, right? So in a more normal environment, prices can fluctuate 3 to 5% annually, year over year.
Yeah.
We say it all the time. Prices never come down.
No, they never come down. It's typically, that's about what it normally is, right?
Yeah.
Somewhere between 3 and 6%. I mean, there may be a couple price increases throughout a year, but they're typically a couple percent here and there. COVID was crazy. I mean, it went up like I'm not joking. Our cost doubled over the course of a couple of years. Our cost doubled. Like a sheet of OSB went from $16 to like $70. It was insane what we went through at that time. We're always trying to keep our costs down. We're trying to figure out, products that are, great quality products that we can build with. Without increasing the cost of a home. And we do it every year. We always improve the quality of the home year over year over year. But we would absolutely never, ever intentionally delay the start of a home. I hear people say that and I'm like, oh my gosh, why would we do that? We're not even getting, when somebody has a price increase, we're not getting more money. We're just trying to recover what the cost increase was to us.
Right.
So we're actually kind of losing in that situation, because now, people are upset. It's the last thing we want. So we always want to, and I've been pushing Deven. I know, he says 150, 150, 150. I'm like, let's drop it to 120. You don't have to address that right now.
No, I'm not going to.
But we want to build the home as soon as possible, and then build it as quickly as possible without sacrificing quality.
Correct. I mean, things that we talk about, as I know this isn't really the platform today, but just as an example, we use a different sheathing now on the exterior wall that's more expensive to us, that we didn't increase the price of the home at all. And it's a superior product. It's called the Zip system.
Mm-hmm.
The reason why we went with it, because it's a better product, but it also allows us to go faster.
Right.
So wherever we can make up days, we're going to do that, even if the product costs us a little bit more money.
Yeah.
So, it's, we're always looking for new and innovative ways to speed the process along, at the same time make the quality better. But, how that relates to that Simply Mitchell, kind of tying things back in before we kind of move on, is that all those things are kind of like a Simply Mitchell sandwich. They're all relative. And, the Simply Mitchell allows you guys to come in. It is our foundational cornerstone. It's the thing that makes us what we are. And then if you had to look at kind of like a 1B, it's the price lock. And those two things are a big risk to Mitchell Homes. And again, like Scott said, even if we get to 180 days or 160 days and we have to pass along a price increase, it's still less than what, all the opportunity of not doing that. We'll show you guys on a calculator here real quick, because I know we want to go over it. But if escalation's involved, you've surpassed that.
Right.
So in the game, we're still the best in show no matter what. Our job is to make sure and communicate that to you constantly, make sure that you're totally aware. The new role that we have is going to make you more aware of where we are. So our costs go up internally to try to help you arrive at this place. So everything that we do is really in the best interest of each and every one of you. Are we going to fail sometimes? Sure. But we're going to succeed way more than we fail. And I think that that's why we're here to talk about it, is to let you know that Simply Mitchell is an amazing opportunity. The Price Lock is an amazing opportunity, and building with us is an amazing opportunity.
Yeah. Before we do go on, we want to show you guys the calculator, but before we get to that, we talked about no down payment. We talked about no construction loan costs. The one thing we didn't talk about is that the third and final part of the Simply Mitchell is no closing costs. So we actually pay all of your closing costs for you that are allowable by law. And what that means is we can pay the closing costs. We just can't pay what's called your prepaids, and the prepaids consist of your real estate taxes and your insurance. So we're going to pay all the other closing costs. We're going to show you exactly how much these three things combined are going to save you on, based off of your loan amount. But so it's no down payment, no construction loan cost, and no closing costs.
Now, is there, just asking the question, to the no closing costs, if you use outside of our lender group, do we still pay the closing costs?
Not typically, no. The only way we would agree to pay some of the closing costs, if you don't use one of our partner lenders, which we talked about earlier, is if one of our partner lenders can't make the deal work and you have somebody that can. In that situation, we're going to come to some kind of agreement on closing costs. We may cap it at a certain percent. So closing costs can vary, like as a percentage of the loan. Really, it kind of depends on the lender. It depends on, it depends on the lender, and it depends on the loan amount.
Right.
As far as like what that percentage is, it can really vary anywhere from, I would say, 1.5% on the low end up to about 3% on the high end. So the lower the loan amount, the higher that percentage is. The higher the loan amount, that percentage just kind of comes down. And then also based off of lenders and what the lender fees are, what your closing agent fees are, things like that. So, but as long as you use our partner lender, we pay it all.
Okay, good. Why don't we, should we go to the calculator?
Yeah, let's take a look at it. We're gonna have Tucker kind of navigate us to our website, mitchellhomesinc.com. If for some reason you haven't been there before. And then, all right. So when you go to our website, you're going to go to the homepage, and then you're going to scroll down. You'll see a couple things, and then you'll see in big white letters, Simply Mitchell, see how much you can save. You're going to click on that. This is where you're going to calculate your Simply Mitchell savings. So it's really simple. All you do is like plug in the amount. So let's put in 450,000. So you put the amount in there and you click calculate, and you can see here, congratulations. When you build with us, Simply Mitchell will save you roughly $44,955 versus other builders. So, it's roughly, in that scenario, it's roughly, about 10% that you're saving. That's huge.
100%. And I just want to put in there, that is, if you had a company that you were looking at going with that had escalation, that's going to be more.
That's right.
That's going to be even more. So those calculations aren't even
right. Yeah, this does not all this is factoring in are your savings from the construction loan interest and the closing costs.
Right.
So those two things. Right?
That could be another 5 to 7% easily.
Right.
So just want to throw that out there when you're looking at this calculator. And you're looking at building with somebody that definitely has escalation in their contracts, add another 5 to 7%, depending on the, currently, I don't know, these will be out there in the ether forever, but currently in today, 2025, we're going through the whole tariff thing, right? So the escalation could be last minute, and we're not adjusting pricing at this point with the tariff. So just saying, it always, in 2 years from now, if this podcast you're watching, it'll be something different.
Right.
But it's always going to be something. And so you got to add that to it. So 44,000 is fantastic. Plus
Yeah.
the stuff that we can't really calculate for you, but just put it in your head that that's going to be an extra charge.
I mean, why did you round down? And you were like $5 from 45 and you said 44.
Well, I have a hard time seeing, to be honest with you.
Okay.
That it's far away, right? No,
That's all right. I'll give you a pass.
All right.
I'll give you a pass. You're older than me.
Yeah, I am.
So all right, let's play around again, Tucker. Like, let's say you're gonna spend 300,000. So 300,000, you calculate 29,970. So it kind of stays. It's roughly like just a hair under 10%, right? Put in 750,000. Let's just play around with it for a minute. See if it holds true there. Yep. So it's almost $75,000 on 750. So, as you can see, it's substantial, and that's money like directly coming out of your pocket. With other builders, they're probably not going to tell you about all that, but we are. So,
Right.
It's right there. That's the deal. That's our competitive advantage.
100%. Well, you could. I mean, maybe I'm wrong, because usually I am. I turn stuff off and whatever, but that 74,925 on the 750 is just that much less house too.
That's right.
That's
right.
You're gonna have that much in less options or whatever it is.
Right.
You get more of your money to spend in the home because that's gonna go somewhere.
Yeah, that's a lot of furniture.
That is a lot of furniture.
Yeah.
So yeah, no, it's. I think that what your father's done is brilliant, and you just don't see that anywhere. And when you guys, I encourage you all to go to the website and play around with it. And those are real numbers. There's no smoke and mirrors here. That's a real number.
Yep.
So we're excited to offer it. We're excited to bring it to you.
Yeah.
It makes people you talk to other people in the industry. I can't believe you guys self-fund and all this stuff, but it's actually also a security for you that we're not reliant or we're going to leave tomorrow.
Right.
That we're going to just take your money and run, because we are just as invested in this as you are. So it keeps you honest as a contractor. There's a lot of contractors get a bad name.
Right.
And we see it. I mean, we probably get, if I'm going to give an estimate, I'm probably short. We probably get 10 to 15 customers a year who come to us and say, hey, I have a half-built house.
Mm-hmm.
The contractor's gone. Can you finish it? And so it happens, and I don't want to put shade on anybody else, but it definitely happens. And
Yes.
Us funding it is the other value that you may not see.
Right.
Because we are it, and
Yeah.
there's no one to take it from.
Yeah, that's an important fact. I know we talked about this in our first take on this episode. I'm glad you brought it up, because we almost passed over it. But it's really important because, everybody else is using construction loans, right? So like we said, they're drawing money out of that loan. They're drawing that money out to go and supposedly pay the trade who did the work so that they can pay for that work. That doesn't always happen, because they might be behind on bills on another job somewhere else, and they may need to put some of that money there. And that's typically how, when people come to us, and we get at least half dozen a year that come to us and they say, hey, my builder, whatever it is, he put the foundation in, the house is framed, and he just picked up and left. He went, he's gone, and we have this construction loan, and it's, there's all this money drawn out of it, and I'm paying interest. Can you guys help? And, sometimes we can, sometimes we can't. It really depends on it. There's a lot of factors that go into that we don't need to go into here, but it's scary. It's real. We're not trying to scare you. We don't want to scare you, because it's not always the case.
No.
But it does happen, and it happens more often than it should.
Right.
And, unfortunately, there's a lot of guys out there who, they may be very good at building. They may be very good at construction, right? But they're not good business people.
That's right.
And so they don't really know how to run a business. And that's how this happens,
Right.
and it's really unfortunate. It does give builders a bad name. That's not going to happen with us. We have we have, like I said, we have cash. We're paying for all this with our cash. We pay all of our subs and our vendors weekly.
Which, to you at home, if you're not in trades, maybe I am speaking to an electrician or a plumber or somebody out there that's looking to buy. You know that that's unheard of. So we pay every week. I mean, it's literally unheard of. And we do it because we want to maintain a good, loyal subcontractor and vendor base that stay close to us and connected to us so that we get the best price, so that, we're a partner that's valued above all because we pay every week. So we do command, we may not have the buying power of $1 billion builder, but we certainly have the leverage with paying once a week.
Yeah.
And that's worth more than volume in a lot of the vendors and subcontractors' eyes. So when we talk about, the reasons to build with Mitchell, and you talk about the SimplyMitchell, and you talk about the 150, and you talk about kind of the horror stories we just mentioned, and, escalation. We're talking to you about the calculator. We're showing you all this. We're the builder to build with because we have all the skin in the game. All the risk is sitting on our lap. Yeah. And, so there's nothing but motivation for us to, one, deliver very happy customers and build it on time and get the 150 on time. There's nothing more than the whole world than we want every time.
That's right.
There's no more motivation than that.
Right. Yeah. Yeah. I mean, we take it, if you guys don't know us that well, maybe you're watching, maybe you're a new Mitchell homie. That's a term we just came up with, by the way. We love it. I think it's cheesy as heck, but
so bad.
I think it's cool. We're going to come up with some t-shirts.
So bad.
Devin's going to wear his Mitchell homie t-shirt on here.
I did not make that. I am funny and I did not do that one. But anyway.
Something that, that's not something you come in here, you talk to one of our online sales consultants, you talk to one of our new home consultants or associates. They're probably not going to tell you, oh yeah, we pay our subs weekly, but it really is, it's important. And it's something that nobody else does. And it does, it gives us loyalty and dedication.
It absolutely matters.
And they want to do a good job for us.
Absolutely. They don't want to lose that.
Right.
They don't want to lose that. So it's good for us. And, an OSC won't say that. A new home sales consultant won't say that. Most of the folks in our company won't. But we will here, because the whole idea of this pod was to really be as transparent as we can be. Right. So that we want to tell you the news. We want to tell you what we do which is advantageous for you in every step. And sometimes it's just gone without saying, which is fine, but we're saying it here so that and all that to say is our skin is in this. Every emotion, all the things that we do is to provide a service, a wonderful, great quality product for each of you. And all of our blood, sweat, and tears goes into it. And all the risk.
Right.
All the risk.
Yeah.
Which is a challenge, right?
Yeah. Yeah, absolutely. Yeah. I mean, I think we talked about it a little bit in the last episode too, but I mean, that really almost all of our time is spent here, like in our administrative office. All of our time is spent on looking at every single deal and trying to figure out how to get that through that process, that journey from contract to keys, right? Like the last episode, right? So, and there's a huge portion of that is pre-construction. We have meetings every single week. We're talking every single day. I don't know how many meetings Devin's in about that, but it's constant. And, it's how can we get this to start?
How can we
right? How can we get it to start? How can we make the whole process better, more efficient? Two words we use all the time are efficient and effective. And that's really what we spend all of our time on. And I mean, it's so personal to us, and, all of our employees really, but, I grew up in this, it's my family business. It's really personal to me. I can get emotional about it. I don't like it when we fail.
Right.
I don't like it when people aren't happy. And Deven, he's only been here for 3 years now, but he's one of those rare people that really, I can tell, he feels the same way I do. And it's hard to find somebody like that. So that's why we're doing this. That's why we do everything that we do. So I think it's, that's something else that makes us different.
Right. All to make it SimplyMitchell.
Right.
All to make it SimplyMitchell. So today, unless you have more to say about the SimplyMitchell and all that stuff, we had been saying that we're going to do a Q&A session and that we're going to, hear from you guys and what you've asked. And we want to continue that process. So I thought maybe this is a good segue unless we missed anything.
No, I think we
Tucker,
touched
we missed
on
anything? All right. Well,
that's all. Yeah. So we touched on everything. Simply Mitchell.
She knows everything.
Yeah.
So
Tucker does know it all. She
says
keeps
we're
an eye
good.
on us, and
so I think we can do some Q&A today, and maybe we'll just alternate questions. And we don't know who these came from, but we do appreciate all the feedback that you guys give. So
yeah,
who
compiled these questions?
I think Brittany did that.
Okay, so these came from the previous episodes of the podcast. People submitted
Stuff online, stuff out there. So
these may be from like our social media, from our podcast, different questions.
That's
okay.
right.
Yeah, let's roll.
All right. What is a rough estimate for utilities, well, and septic? That's a tough question.
You want me to answer that, or you want to?
Go ahead.
Yeah. Okay. So, rough estimate is the right word here because it can be different. I think, we can both kind of tackle this one together, Deven, but I think, what we allow in your contract, we allow 15,000 for well and 15,000 for septic. And we kind of came up with those numbers. Like every year we look at what's the average well and septic over the course of the year. So, Hira, who's our CFO, she'll run numbers with Scott in our purchasing department, different Scott than me. They'll run the numbers, they'll send them out, and we'll look at it. And that's where we were. So that's where we were at the end of 2024. It was 30,000 on average for both combined. Now,
it just varies so much. Some people may come underneath that, and then some people explode that average when you have different types of septic systems, especially. The septics can get out of control. But to answer the question, the rough estimate is about 30,000. We're going to have an episode that breaks down all wells and septics here soon. We want to show you guys all the different types of systems, what those systems mean, because what's going to happen just really quickly is you get a perk test from an engineer who's going to evaluate the soil for that septic, and they're going to say, this is an engineered system. Not very many people know what that means. You get a number for that, and everybody wants to fall out of their chair. So, we're going to explain that in detail about what that is and what that means. But to answer this question, I think 30,000 is where we kind of fall on average. And, I hope that helps.
Yeah, I think just one quick point on that, and then we'll move on. That can vary significantly. So that's the average. Like Deven said, if it's an engineered system, if it's an alternative system on the septic, the septic alone can get as high as like $50,000 or $60,000. That's not happening that often, but it can happen. So it's important. Go back, listen to our episode where we kind of talk about
purchasing land.
Right, purchasing land. We talk about that. So go back, listen to that. We'll give you a lot more detail on that.
That's right. All right. How about I ask number 2, because it's a good question for you. Can they still take advantage of the SimplyMitchell if they are paying cash?
All right, let's think this through. So if you're paying cash, we're talking about no down payment, no construction loan costs, and no closing costs. So obviously if you're paying cash, you're not going to have construction loan costs because you're paying cash. You're not going to have closing costs because you have no loan. So you take those out. Now, as far as the down payment goes, when you pay cash, there's a couple things. We're going to give you a discount. So I think we give a 1% discount on top of any other incentives that we're offering at the time. So there's a little incentive there for you to pay cash. By the way, we love cash deals. But as far as the no down payment, we have a cash draw schedule that's in the contract. And I think there's 5 different points in there where you're going to give. So you're going to give us a little bit of money before we start. You're going to give us a little bit of money at one construction stage and then another. So it almost acts similar to what a construction loan would be, although builders are taking more maybe 20 or 30 draws. We're just taking 5 cash draws, but the cash has to be put into an escrow account. So anybody could come to us and say, hey, we want to pay cash. we go through the whole process. We start building the home, and if it's not somewhere safe, we don't know that the money's there. So we require it to go into an escrow account. It goes into an interest-bearing escrow account where you're actually earning interest on the money, and then certain times, we're gonna require like a cash draw on that.
Right.
If you want to pay cash, talk to your new home consultant. They can show you the draw schedule for the cash, but it is advantageous for you. You're not, there's no interest, there's no closing costs, and we're giving you an additional discount.
Right. So it's still Simply Mitchell.
Yeah.
It's just your cash and escrow
That's
account.
right.
All right. Number 3, go ahead.
All right. If they haven't found land, when is the best time to start a conversation with a new home consultant?
This is a really good question. And in fact, it's something that just came up in a couple of meetings that I've had recently. So again, we'll go back to the purchasing land podcast. I think that whoever asked that question, I think really should go back to that. But it's always a good time to start having a conversation with your new home consultant. It's always a good, idea. Now, give you kind of like an idea. So let's say you found 5 pieces of property in the general area that you're going to be building in, or want to live in rather. And let's say one of the lots is 2 acres at 50 grand, 75 grand, but you really want 100 acres that's 250,000, whatever the case is. And you have it kind of prioritized in order of what you really want. I think if you get to that place, you really want to talk to the new home consultant, because you need to start considering what type of house you can qualify for and afford on that property. And it allows you to buy the land that you would really prefer given the budget of the house that you want. So,
Right.
If it were me, I would do both simultaneously, where I'm looking at land. If I'm serious, I'm looking at land. At the same time, I'm getting with my new home sales consultant. We're talking about a home. I'm coming in, I'm meeting, I'm looking at all the different luxury options. I'm looking at all the different opportunities. I'm looking at Simply Mitchell. I'm looking at the costs. And then that'll help me make a decision on the type of land to purchase.
Right.
So I think honestly, and also they're going to help guide you in a good direction. Maybe they help you answer questions on due diligence. Maybe they give you pointers on what you may have not thought of. I think it's an excellent time to start right away.
Absolutely. 100%. Yeah. I mean, it's a golden opportunity if you haven't already bought land, to have that consultation. Not only your new home consultant, but we have so many people, on our team here who are experts in so many different areas. We don't want you to buy a piece of land that isn't going to work.
Right.
And that happens a lot. Please go back and watch the episode Purchasing Land 101. We go through all this, so we're not going to go into a whole lot more detail here, but now is the best time. If you're considering purchasing land, if you're looking for land, get in contact with us, come in, talk to one of our new home consultants, because we can help.
Right. All right. Do you have land for us, and how do we get land? I think we don't have land.
No, we don't have land. 100%. We do not buy land. That's what allows us to offer the Simply Mitchell, because we're not putting our money out there and holding it up in land. If we did that, we wouldn't have the money to build without the construction loans. Simply Mitchell would be gone. That's kind of our secret sauce right there, is that we don't buy land. So I think, go back and watch the episode on purchasing land. We talk about so many things in there that are just relevant to that question.
And how do you buy land? I mean, it's not that difficult. I'm always looking at property constantly. It's a passion of mine. I must be extremely bored, but that is what I enjoy doing. And there's a lot of platforms that make it easy to find property. Mm-hmm. One little trick that I think is something that just helpful, maybe you go on some of the, websites that show land and houses. I won't say names, but if you, filter with certain filters, and you say, I want a parcel over 10 acres, more land pops than houses. So it is something that is a good tool.
Yeah.
If you use the right filters, you'll kind of filter out the houses that you're not really looking for, and all of a sudden you'll see a bunch of property.
Right.
So, you have a minimum acreage size that you're looking for to a maximum, and that's going to really pop a lot more property than it will residences.
Yeah. Well, they have an actual land filter on, I believe, realtor.com and Zillow.
Both do.
And you can just click on land.
You just got to, so if you just take the land and you don't put the houses on it,
right,
you have to adjust the square footage.
Yeah.
Because if you don't, they're not going to show you a ton.
Okay.
I just learned that myself. So, it's just a pointer, use the right filters and you can find some property, or, get it with a realtor. I know that realtors, it's no talking bad about realtors,
right,
but when you're talking about property, that can get choosy. And so, there are specific realtors out there that specialize in that. So I would seek them out. But purchasing land isn't that difficult. Go watch Purchasing Land 101. It'll help. It's a great guide.
Yeah, I think we do talk a little bit about the realtor situation there too. Be careful, because they are going to want to sell you, they're going to want to sell you a resale home as opposed to land.
Right.
Land doesn't cost as much, so they're getting paid a little bit less. Everybody's motivated by money. We understand why it happens.
Right.
But go back and watch the episode. We talk a little bit more about that.
Perfect.
All right. Number 5, what does your pre-approval process look like? And then there's part A to that. People want to know how to get in touch with our lenders and determine their budget maximum limit. Okay, so what does your pre-approval process look like?
Well, there's a short form and a long form on our website.
Right.
You can fill that out. Typically what we like to do is get you in, and you can fill that out with the new home sales consultant. You can also do it prior.
Yeah.
Either way, whatever your preference is. But it makes it really easy on our website. You can go and find that form. You can fill it out. Then come in and meet, with the new home sales consultant, reach out to one of our OSCs. They can send you on the right path, go through the website or call in. They're going to lead you down the right road.
Yeah.
It doesn't take long to get what that pre-approval would be.
No.
And then, you want to piggyback that with an appointment with the new home sales consultant just about as quickly as possible, so they can help guide you, because, there's tricks to it too, right? So you get this form filled out and maybe your credit score is a little bit low. There is some finagling that can happen, and our lenders are good at working with customers individually after that process has happened.
Right.
And so they'll work with you to get you where you need to be or where you want to be, in order to get your pre-approval done. So we really take that. That's one of the other advantages of going with one of our preferred lenders. They know who we are,
right,
and they're going to work with you to get you where you'd like to be.
Yeah, we do have, and I want to get Tucker just to pull that up real quick. We'll show you on the website where the pre-approval application is. So I think Tucker, if you go to Y Mitchell drop down, and then you go all the way down almost to the bottom, pre-approval application, it's going to open that. It's a fillable PDF. You can just fill it out here. It's pretty simple, pretty basic stuff. It's like basically the front and back of a legal size document.
Right.
You do have to print this out and sign it, or else we can't legally process it. So you can fill it out online, and then you're going to print it, sign it, or you can sign it digitally if you have that capability. Sign it digitally, and then you email it to info@mitchellhomesinc.com. We'll shoot it over to one of our partner lenders, and we'll hear back from them really quickly. So you'll get, and I would say, if you're thinking about building, do this, send it to us. It's better for us, it's better to have it up front. So, and we know kind of what we're looking at. You don't want to be, then you kind of know what your budget is, right? Like, you're going to know, like, I have $500,000 to work with, right? You don't want to, let's say you send it in and they say you only approve for 400 and you've been looking at a $500,000 home, then you have to backtrack. So the sooner you can do that, the better.
Right. And I think that too, if you fill that out and you get a credit score that you weren't happy with or whatever, don't let that dissuade you too much, because I still think coming in and seeing us and let us have an opportunity to help you through that, you want an advocate for you. So we have people that, we'll help you through that. They'll pass you, new home sales consultant will turn you over to the lender, and then you two will work through that, going forward to get you where you need to be. Maybe that's a 6-month plan, or maybe that's a 2-year plan, but we want to make sure that you know that we care. Maybe we can't build with you right away, but we will build with you. So, we'll work through that however long that takes to get you where you need to be. And we don't want you to feel like you can't come in because you didn't get the credit score that you wanted. We'll definitely make time and facilitate a meeting so that you at least get good information and that you're headed on the right path.
Yeah, absolutely. Yeah. Don't let it discourage you, because our lenders will work with you. They'll tell you what you need to do to raise the credit score if that's what you need to do. That we've been working with them for a long time. We've worked with people for years sometimes.
Right.
And eventually, they'll get where they need to be. We'll build them a home, and they're, as happy as can be. So, send it in as early as possible. We're gonna get you in touch with the lender, so that kind of goes into both parts of that question. But send it to us. We'll be in touch, and we'll let you know where you stand.
Good. All right. Where are we at?
Number 6.
6. Can we modify your plans? Our plans?
Yes.
Yes.
Number 7.
We do it all the time. I mean, we definitely offer that as a service. We want you to try to make those changes with your new home sales consultant. Again, I talked about, we don't need to go too far in this, but talked about that in contract to keys. The more changes you make, the harder it is for us to deliver that 150-day price lock. Mm-hmm. Just know that. So we'll make them if you have an extensive amount of changes or modifications. It's probably where you want to buy the price extension.
Right.
But we definitely move them 4 feet, move them this, move them that. We want your home to be exactly what you want within what we're capable of doing. Obviously, there's some requests that just can't be built, but we're definitely, we do it. I would say 95% of our builds, we have some change.
We always modify plans, so that's something that's, again, it's unique to us. A lot of builders won't let you do that. So we do it. We do it on almost every single plan. While we're talking about that,
I knew you were going there.
Yeah, this is a great little segue here. So we just launched InSearch. We talked about it. We met with them in the last episode when we were in Vegas. So we just launched what we're calling like part 1 of InSearch. So I'm going to have Tucker pull it up here for us. We're not going to go into it. Just going to give you a real quick glimpse at it. So go back to go to our homes, and then floor plans, and then you scroll down.
The ones
and
with the
so,
yellow
all right,
ribbons.
so all of them aren't active yet, but if you go to our website, you go to the floor plans, everything that has the interactive floor plan available now, it has one. Let's go over to the Ava and click on the Ava, because that's probably our
scroll all the way down. It takes a second
seller,
to load,
right?
Nope, back up.
Oh yeah, so it takes a second to load, and it'll load. But this is it. This is an interactive floor plan and also an interactive exterior. We're not going to really kind of go through, but you can come here. You can Tucker, you know how to do this, right? Yeah. So you click on personalize your floor plan, and you can start adding different, options here. So there's an optional bath, right. 2 different optional baths. You've got the chef's kitchen. And so it's going to show up as red. So this is really cool. There's all kinds of stuff you can do on here. See what the deck's going to look like. You can go and you can build your exterior as well. We're not going to do that right now for, time's sake, but you can pick like everything from your roofing. I don't know. I mean, do you want to show the exterior real quick?
And we'll do a full podcast on this.
Let's go to the farmhouse exterior.
I think we'll do an entire podcast dedicated to InSearch while he's talking to Tucker, so that you guys can at home know how to navigate it. It's going to be important that we share that with you in like greater detail. But it is pretty user friendly.
Go to let's show them real quick, because I see it there where it says personalize your kitchen. This is awesome. So you can actually come in here and you can start like putting flooring and cabinets and cabinet hardware, different faucet finishes and all kinds of stuff in here. So So this is basically the same way it looks. I wanted to show this because I thought it was so cool, but you could do the same thing with the exterior. You can do it for the bathroom also. So, check this out. This, kind of ties into that question about
Sure.
modifying, right? Because you can see here a lot of on the floor plan itself, on the interior. And then what you can do is you can save the design. And when you save that design, it's going to send it directly to us, and it'll save it in your file with us.
Right.
So we'll have that information. We'll know what you like. If you want to get a price on it, you can come on in, schedule an appointment. We can go through it with you and talk more about it.
Yeah, absolutely. It's exciting. We're super excited. So yes, we do modifications. Can we estimate the price per square foot? Is there an estimate?
The only person on the planet that can do that is Deven.
I can.
So if you want a price per square foot estimate, call Deven.
It changes. It's misleading. The number's not right. So the number doesn't really match. Smaller footprint, higher price per square foot,
right,
which doesn't make sense, but it is the way it is. Yeah. 2 stories are a lower square footage than a single story. So it's too tricky. It also changes based on where we build in so many different places, so many different states. It changes where
foundations and
code
if there's a garage or a porch or different things like that.
Maryland requires fire suppression.
Right.
So there's different requirements in some of the different states and municipalities that we build in. To give a blanket price per square foot, it just doesn't work.
No.
And so we don't offer it, and we don't even shoot it out there because it's just not. It's not relevant, to be fair.
It's probably like the most frequently asked question we get. I see them on all the the Webly information requests that come in from our website. Everybody wants to know, what's your price per square foot. There's no way we can do it, but what I'm going to tell you, here's what I'm going to tell you to do.
It's easy to do.
Go to our website. Find a plan that's in the square foot range that you want, right?
If it's in the area you want to build it in.
Click on the county. So you go there, you click on the county that you want to build in, and then you go and you find a floor plan or 2 that are, roughly the size and kind of like the style of what you're interested in. Click on those. Take the price that it's going to give you. It's going to give you the starting price. Take that starting price, divide by the square foot, and it's going to give you a square foot price, which, is going to be somewhat close to what you're looking for, hopefully. But we can't just throw out square foot prices. We can give you, the square foot prices of our homes, but you can get that right off of our website.
Just remember, when you go and you do that, because people will, the foundation is the variable.
Right.
So there's a lot of variables that are out there. If you have 14 feet of fall on your lot, we talked about that again in purchasing land 101. It changes the price per square foot because the foundation is much bigger. So we don't advertise it. It's easy to find at a basic level, but it's not 100% accurate.
Right.
Let's see.
Number 8, do you build duplexes?
We do.
Yeah.
We can.
Yeah.
We don't build a ton of them, but we can. I mean, it's not a difficult thing. It's going to be, whether the municipality allows it in the area that you have land.
Right.
There are some extra municipal codes that will allow for multifamily.
Right.
So, you got to make sure that if you have a piece of land that it allows for that, especially in like an HOA or something like that. But definitely we can build them. It's just you got to do your homework on where it's being built.
We can do them. We've done them in the past. We've done a lot of different things. We've done like your traditional duplex. We've also done we've taken like 2 of our homes and connected them with breezeways. Sometimes people do that if it's multi-generational family situation. It doesn't necessarily have to be zoned multifamily, but they have to allow an accessory dwelling unit.
Right.
It depends on how it's built. It really depends on the design. We can help you through that. So if you want to do it, reach out to us and schedule an appointment with a new home consultant. Come in and let them walk you through that, because they're going to know exactly what you need to talk to the locality about. We can help you with that. We've got people here that are, that are skilled in like knowing what to ask. So come in, schedule an appointment. Let's look at your plans, see what you want to do, and we can help you with it.
Sure. I think so. Why should we go with Mitchell Homes over another builder? I mean, we kind of clearly outlined the advantages. I think that we touched on a lot of things. I can tell you the difference between us and everywhere I build. Now, Scott is this family business. I've been outside of that, so I've seen a lot of different types of builders. Not a lot. I mean, I've been through my fair share, but nobody cares more than we do. That I know for sure. We don't just care about our bottom line. We do, but it's not the most important thing. The most important thing to us is each and every one of you. That's not just tongue in cheek. That's actually what we really value. We want to make it an easy process, and everyone here has the same vision. And it's a rare situation to get into when you talk about all the things we just talked about, as far as the Simply Mitchell and all the things that we're giving you financial value for. But the stuff that sets us apart, in addition to those things, is I think how much we really truly care, listen to the customer. Again, we may not be 100% perfect every time, but we're going to do everything we can within our power to make sure that we, correct anything that's wrong. And, we're going to always evaluate our process and always evaluate our procedures and always try to get better. And there's never a day, I can assure you, because that's my job, is to make sure that we're always getting better. And there's not a lot of people out there that are just worried about the whole customer experience like we are. We want you guys to feel, because that's how we feel, appreciated, valued, cared for. We say we listen, we care, we deliver, but it's probably more than that.
Yeah, I mean, I think you hit the nail on the head. We talked about the financial advantages. We talked about the quality. The big thing is that we care. And I'm sitting here as you're saying that, I'm trying to think, like, why is it, what makes us different? And I think what it is, I know a lot of builders. I served as the president of the Home Building Association here. I met a lot of builders, through all of that. And I think the difference is that, for the size that we are, we're still family owned.
That's right.
Right. So typically a family owned builder is going to be a small guy who's building, 10 homes a year. The builders that, that cover the area that we do the build with, the quality and get like the pricing that we get because of the scale, they're either a public company, or they're owned by like private equity,
right,
or they're owned by somebody out of state. And, and it's just different because we are family owned. We're all really close. Like we do, we care, we take it personally. Which I think, the next episode, it's going to get real personal, because we're going to get into, online reviews and talk a little bit about that. But I think, that alone kind of tells you like, we care, we want to be transparent. And we want to address the things that, that we may not have done right, that we're working on to make better. So,
right.
Hopefully you can tell that we do care. And I think we are different and very unique. And I don't think there's anybody else like us.
I don't either. And I think that without waxing long and long and long on it, I mean, we're the best in show for all the different phases. Is there places we can get better? I can just hear the comments, you didn't do this or you didn't do that. It's a hard thing to build a house.
Mm-hmm.
It's even harder to build a house on your property.
Mm-hmm.
And then when you have all the risk to the hard thing,
right,
where there's no real relief, it is a difficult endeavor that we do on your behalf. And we do it with a smile.
Yeah.
And the hard doesn't scare me. Hard doesn't scare you. Are we going to trip? Yes, but we don't trip as much as we succeed. And it's a company that continues to care about its brand, cares about its reputation, always wants to do better, strives for better. Are we going to be better 10 years from now? Absolutely, because that's our goal, is to always be better and always be best in show and always be a step ahead of everybody else. And the absolute God's honest truth is the bottom line isn't the motivating factor.
No.
And it usually is. And we need to make money to keep the doors open. We need to make money to provide for all the families that work with us and the folks here that are employed. But they're loyal. They've been here for 20 years and they know the business inside and out. And, you know, we strive to get better. So without a doubt, we're best in show. You know, that's all I can say. That's why you go with us, because we're the experts in this particular niche.
Yeah.
Build on your lot. People have tried. They don't do it as well because it's hard.
Right.
And we're not afraid of the hard.
Yeah, I think that was great answer. I'm not
Nothing
going to add any more to it. I'm going to leave it at that.
held them speechless.
Yeah.
Scott said next episode's going to be reviews. That's going to be fun. I'm excited. I'm actually really excited for this because I think we need to bear all. And at the end of that episode and after this episode and after all the episodes, you're going to know that to answer 9. That's why you go with us.
That's
because
it.
We're not afraid of it.
Yeah, because it gets. I mean, I'm sure you all know what people will put online, and you know, some of them we may think are unfair, but we're gonna look at them and we're gonna
address them.
Yeah, we're gonna
tackle everyone.
Tackle them head on and see what happens. I am not excited about it, but I am at the same time. So, well, you know, we've been talking about it. I keep pushing it back.
I'm excited about it.
But we're gonna do it, and we're gonna address it all. We'll show you some good reviews and some really bad reviews.
Yep. But hope you guys took a lot from this. Take notes as always. I should have said that up front, but I guess you can like watch it again.
Yeah, I think that if you guys would like make sure wherever you're watching us, whether it's Spotify or YouTube, like our channel, subscribe to us.
We never say that.
Leave us comments. That's that's where we're getting this information. So your comments they mean a lot to us.
Only the good comments.
Yeah.
That's all. That's it. Especially about Scott. All the good comments.
Right. Yeah. Bring it. Yeah. And definitely, like us, subscribe to the channel. And we'll be back next time with the next episode on reviews.
All right, guys. Have a great day. See you next one.
See you next time.